For those of you already here, I'm really looking forward to the conversation tonight. You've heard me refer a lot to the five critical areas of retirement planning that we want to make sure that we're both well prepared and confident. Right? And we call it a route for our retirement roadmap model. And when we talk about the route, we talk about the risk management, which is your portfolio, the risk you're taking within your portfolio, the optimized income planning, where are we taking distributions from? Do we have a Social Security plan dialed in to make sure we're maximizing that benefit? Then we get to unexpected healthcare expenses, right? That's anything from our planning for uh, bridge insurance, Medicare, supplements. And what we're going to talk about tonight, we also have conversations around unexpected health events. It's long-term care planning. And we're going to dive deep. And one of the things I do and I try to do for the families we serve is bring people in. I call it the Rich Life Brain Trust, right? That have extensive experiences in this conversations, and tonight's no exception. Just to finish off the circle, you have the T in the route, the tax planning, and the E's, the estate planning. But again, we're going to focus tonight on long-term care. And Anna, does it look like we have some our people in for the most part? Yeah, let's just roll right into it. So as I was saying, we're going to be of the five critical areas tonight. We're really focusing on that unexpected health event. And a subset of that, right? We're talking about long-term care event, and we'll get into some of the data around that and what it is, why it's important to have the information and awareness of that. But bringing in people with deep experience, and this is what our guest today does. Been doing this for a long time. Richelle Collazo has been a long-term care planning professional since 2005. Started her career with GE Financial as a long-term care specialist, awarded Rookie of the Year. So she's been doing it at a high level for a long time. 2011 started her own practice. Her experience in long-term care is diverse. She's been a wholesaler, brokerage director with GE, Genworth Financial, and The Guardian prior to joining One America in 2016. And she's assisted our team and a lot of families that we work with through her work with One America, helping us figure out solutions and have some of these conversations. She now resides in Fort Mill, South Carolina. So without further ado, the person we would want teaching us about this topic, Richelle Collazo. Welcome, Richelle, and thanks for coming out.
Thanks so much, Beau. Appreciate the invite. Hello, everyone. Thanks so much for dialing in. I've been in the long-term care space, as Beau said, since 2005. And so I think I figured out a way to talk about long-term care planning and dispel the myths in a kind of quick and easy way. So it's easy to understand and digest and not too painful. So let's dig in. The best way to start is to talk about the myths versus the facts when it comes to long-term care planning, because there are so many misconceptions. So you're going to know a whole lot more after we're done today. Okay, so, myth or fact, more people will one day need long term care services at home or in an assisted living facility or a nursing home. And the cost of care is on the rise, right? The cost of everything is on the rise. On my lunch break, I went to the grocery store and I can attest to the fact that the cost of everything is on the rise. And so, too often, people don't prepare for their future needs because they're confused and there's so much misconception. So we're going to dig into that today. We're going to set the record straight, so to speak. Let's start with myth number one. And there's seven, by the way. Myth number one is a government program will take care of me. Well, this is a misconception. But before we tackle this myth, I often ask folks when we're together if they've ever had an experience with a family member or a friend or someone that they've cared about, maybe a neighbor who's had some kind of a health change and needed care either at home. Maybe they had to hire someone to come in and help out at home or move in with a family member, or because they got some kind of illness or in an accident, or they got older and frail and forgetful and needed an assisted living facility or nursing home. And when I'm in person and I ask the question, I'm always getting heads nodding, right? We all know somebody that's needed some kind of care. So if we were together, I'd ask you about your story, but since we're virtual, I'll share my story. My grandmother needed care after a heart surgery, and then it became, you know how that works, one thing after another, especially when someone is older and they have surgery. And so my mom was a stay-at-home mom, and my aunt was a nurse, and she lived just less than 15 minutes away from my grandmother. But um, she had to work full time, and my mom was a stay-at-home mom, and we lived about 2 hours away. Well, so our family was selected to be grandma's care provider, and it wasn't easy. Grandma wasn't always cheerful, and it was tough. And you know what's really tough too? The responsibilities don't get shared equally. Long-term care events. I don't know if you've had one in your family. I'm betting a lot of you have. Often it's not a situation where it brings families together, but it can tear them apart because the responsibilities aren't shared equally, and people have differences of opinions. Everybody's got an opinion, right? But not everybody wants to roll up their sleeves. So it can easily be one of the most stressful times in someone's life. And it would be a beautiful thing if there were a government program that could really help folks. But that's not the case. When it comes to Medicare, there's Medicare and there's Medicaid. Well, Medicare is the insurance you get when you're 65 or older, and it's very similar to your health insurance. So if you had some kind of health event and you needed medical assistance, you'll get a little bit of help with long-term care. Like let's say, when my other grandmother got sick, she had a stroke. And when she went home, because she was in rehab, she got a home health aide that would come to the house 3 times a week, 4 hours at a time. Certainly not even a drop in the bucket compared to the help she needed. So Medicare helps a tiny bit, but it's not the long-term solution, because once you stabilize, they don't continue to pay. And then Medicaid is the welfare system. So you have to be broke in order to qualify. And so I think we're all trying to avoid that going broke option, right? So government programs really don't help much at all when it comes to long-term care. Sometimes when folks aren't well versed in Medicare, they're thinking, oh yeah, I'm sure it covers it. No, just like your health insurance, if you get sick younger, isn't going to cover the care you might need at home. So that's our first misconception. Next, we've got, whoops, my slides are a little delayed. Let's see. There we go. Myth number 2. I can save the money I'll need for long-term care services. Now, this is called self-funding, planning to pay out of pocket if you need care. And this was a really common reaction back when I started selling long-term care insurance. Most folks were buying traditional long-term care. Now we have something called asset-based long-term care. Let me explain what the difference is. I liken it to renting a home versus owning a home. And listen, sometimes renting is the perfect solution, and often owning a home is. So there's not a right or wrong here when it comes to traditional versus asset based. But with traditional, which is like renting a home, you pay for your insurance, every month or every year for as long as you want to be covered. And if you decide one day to stop paying, well, just like an apartment, you can't just decide to stop paying, or you don't have any coverage. You didn't build up any equity. If you pass away and you lived in an apartment in rent, because you were renting, you don't get to leave that apartment to your heirs or your beneficiaries. So you're not really owning anything. If you decide to move out of your apartment one day, no one hands you a check for being a good tenant and all that money you paid. You don't get anything for it, but sometimes it can be a good option. There might be some folks on the call that bought a traditional plan years ago and got something that was really a lot of bang for your buck, and that can be great. I wouldn't suggest just dropping what you have if you have a traditional plan, even if you have rate increases, because that's another thing with traditional long-term care insurance. The rates are not guaranteed and they can increase over time. Now, today you have something called asset-based long-term care, and it's often built on a whole life insurance or an annuity chassis. And you might think, well, I don't need more life insurance, or I don't want an annuity. That's just kind of the plan B. A great asset-based long-term care is built on that chassis only because it can bring along with it so many guarantees, and more like home ownership. Because when you have an asset-based plan, when you're paying a premium, you're building up equity. Like if you were to ever change your mind one day and not want the insurance anymore, which almost never happens, by the way, because the longer you have a long-term care plan, and when you see friends and family members having health changes, you're thinking, wow, I'm so glad I have that. So very few people walk away, but if you did, there's a cash value. So there'd be money to go along with you walking away. Or this is the best part, in my opinion. If you're lucky enough to never need care, there's a death benefit for your beneficiaries. So there's a guarantee that you're getting something from an asset based plan. So it's a guaranteed premium. It can never go up. And that's in the contract. That's just not we're hoping it doesn't go up. It's in the contract that says this premium can never change as long as it's a true guaranteed long term care plan. So you've got guaranteed premiums, you've got a death benefit if you're lucky enough to never need care, and you've got really robust long-term care benefits. There's a plan out there that even offers lifetime benefits, so it will pay out for as long as you should need care. Now, here's a little bit of a trick question for you. How many of these asset-based plans, what percentage of them do you think turn into claims one day? Well, whenever I'm with folks and they're answering this question, I get, well, 30%, maybe 40%. The answer, and I said it was a trick question, right? The answer is 100%. Because if you buy an asset-based plan and you're lucky enough to not need care, there's a death benefit. So either it's a long-term care claim or it's a death claim. But no matter what, we can guarantee you didn't throw all that money away because somebody's getting something out of the plan. So, so years ago, people would say, when I would show them the traditional long-term care plans, and those are good plans, but often people would say, wait a minute, you mean I could pay for this for many, many years? And if I never need care, I get nothing for it. And so that's why people, it used to make sense. Okay, I can afford to pay for my care if I need to, I think. So I'd rather take my chances. Well, maybe that's not the smartest financial decision, but I can understand the logic behind it. But with the asset based, if you know you can get something out of the policy no matter what, that self-funding option isn't quite as popular anymore. Now, let's look at the cost of care because that's super relevant, right? Well, here's the monthly median cost of care in the state of Georgia. In-home care in 2024, it's about $5,300 a month for homemaker services, and a home health aide is about $5,500 a month. For the community assisted living, about $2,167 for adult daycare, and for assisted living, it's just under $5,000 a month. And these are average numbers, by the way. So you might be thinking, well, I know someone who pays a whole lot more than that, or even for home care, I know someone who pays a lot less than that. These are just averages. So there's certainly the cost can be all over the board. I love this study because this company called Care Scout's been doing it for over 20 years, and they do a really great job of really researching the care in all the different parts of the country. And when it comes to nursing home care, we're talking a private room in a nursing home in Georgia on average is over $9,000 a month. Now those numbers are pretty big, right? How often, who wants to, be on the hook for writing a check for between, let's say, $5,000 and $10,000 a month? And the hard thing is when someone has a health change and they need care, often you don't really know how long they're going to need care. When my grandmother had her stroke at 90, my grandparents are really great savers. And so we weren't worried about that first check we wrote, but there was no way to budget it because we didn't know how long she was going to live. How long were we going to have to pay those big bills? Was the money going to last? Whereas if she would have transferred the risk to an insurance company, that would have made it a lot easier. But here's the thing, these are just the costs today. What's it going to look like 20 years from now? Well, let's see, that home care is almost 10 grand is the expectation, and the private nursing home, $17,000, and that's in 20 years. Can you see how that could impact a retirement portfolio? And one of the great things about the plans today, the asset-based plans, is there are so many options when it comes to funding them. A lot of people think when you buy these asset-based plans that you have to write one fat check. You can if that's what you want to do, or you can just pay over time, but it's all guaranteed. One of the options that's super popular is One America's asset care using qualified money. So in this example, it's a 60-year-old male female couple, and they're going to take $173,000 of qualified money and move it over into this long-term care solution. Because they're moving it over, right? We don't want someone to have a big lost investment opportunity. They give them a 25% bonus on those dollars. So now you repositioned 173,000 and you repositioned it, and it's the value is $216,000. And let me show you what that gets. What they do is what we do is we take a distribution. So we move over that lump sum, we add on 25% bonus, and then every year for 10 years, we'll take a distribution. So $21,633 comes out of that existing qualified money and funds a 10-pay asset care policy with lifetime long-term care benefits. So you're breaking up the taxation. So you'd be taxed on the 21,633 every year for 10 years, not that over $170,000 at one time that you moved over. And if you're lucky enough to never need it, there's that death benefit. And here's what it looks like. That one-time premium is $173,060. And this is for a married couple. If they're lucky enough to never need care, there's a death benefit of $192,000. And if they do need care, there's an $8,000 monthly max benefit for as long as, per person, by the way, for as long as they need care. Now, these are really robust benefits. You might be thinking, if I get sick, my daughter's already told me she's, built a home and there's a mother-daughter, unit there, and I'm going to move in with her. Well, often folks have some kind of a plan, or I shouldn't say often, sometimes folks have some kind of a plan like that, but they don't want their daughter or whoever they're moving in with to have to do everything for them. A long-term care policy pays for all the things you never wanted your kids to do for you in the first place. They can visit with you and, make your coffee just the way you like it, but do you want them helping you in and out of the tub or the shower? Probably not. So this plan, if that were someone's plan, I'd say, well, you probably don't need an $8,000 monthly max. You need less because you're already planning on moving in with a family member. So these are so customizable. But $8,000 monthly max per person for as long as they should need care by just moving over that 173,000. And if you say, well, I don't have qualified money, or I don't want to use my qualified money. Well, if you just wanted that robust policy, you could have an annual premium where you paid $11,368.26 a year. And there's a full waiver of premium. So if either you or your spouse are on claim, no one's paying the premium because it's fully waived while using it. So there's a lot of flexibility here, but just that qualified money option is one that's very popular. But so you'll see it's very customizable no matter what your comfort level is. Sometimes people just want to be one and done and write one check and call it a day. Sometimes folks say, oh, I'm really investing in the market and I don't want to give up a lump sum. Tons of flexibility. That's why it's great to work with the folks at RichLife because they look at your overall financial picture. And so I bet you on this call, there aren't two people that would have the exact same plan because they look at your finances, your comfort level to figure out your plan for long-term care. And they figure out something that's the right fit for you because it's got to be affordable, but it's also got to do what you need it to do the day you have a health change and need care, right? So myth number 3, only old people need long-term care services. Well, among folks 65 and older, the expectation, and this is according to the Department of Health and Human Services, so not an insurance company statistic, but the Department of Health and Human Services says there's a 70% chance we're going to need help at some point in our lives. And when you're a married couple, odds of just one of you needing care are over 90%. That's why I love the asset-based solutions that have joint contracts. And even some of the traditional plans offer joint contracts too, because we're not sure which of you will need care or for how long. So to share one contract really can get you a lot of bang for your buck, so to speak. And sometimes, and this is what people don't tend to think about. Often people think, okay, maybe I'll be living my life and have this health change and then need care and pass away. And for some folks, that is how it works. But for plenty of people, like my mom, for instance, the first time she ever needed care, she was only 70 years old. And I was living far from her at the time. And I was in the long term care business. I didn't sell her policy. She bought it before I was in the business. And so, but I was living far away and I could hear like she was exhausted and cranky, and so was my dad. And that wasn't their typical demeanor. And they were so stressed out. And I said, and I was talking to my dad about the situation. And I said, Mom, I think it's time for you to use that long term care policy. And she goes, That's ridiculous. Uh, that's for when I'm old and I have dementia or something. That's not for now. And I'm like, Mom, it can be for now because it's any time in your life that you need help with those activities of daily living. We call them the ADLs. And basically, that's everything we did when we got out of bed this morning. From getting out of bed, they call that transferring, getting in and out of a bed or a chair, to bathing, dressing, eating, toileting, or continence. If you need help with two of the six of those, and it's expected that you'll need help for at least 90 days, you can use your long-term care policy. Or if physically you're perfect, but you have a cognitive impairment like dementia or Alzheimer's, and your doctor feels like you need supervision, you can use it for that as well. So when I told my mom that she should go on claim and use her long-term care policy, she said, that's ridiculous. And then I told her about the ADLs, and I said, transferring, Mom, you really can't get out of bed on your own. I can too. I put one hand on the nightstand and one hand on the doorknob and I pull myself up. I said, Mom, that's not doing it yourself. And here's what's great to know. You know how I just listed the two of the six ADLs? In the contract, it says if you need hands-on assistance, you qualify, or standby assistance. So I said, Mom, you're not that steady, so someone should be standing by. Like you'd never get into the shower without someone at home right now because you're so unsteady. Well, yeah, that's true. Okay. She easily qualified for her benefits. So most folks think it's tougher to qualify than you think. It's just important to remember there is a 90-day criteria. So if something happened and your doctor said you're good, you'll be healed in 60 days, that's not a long-term care event and no long-term care policy will cover it. But if the event looks like it will be 90 days or longer, then you can be covered if you need help with those activities of daily living. So it's true that most folks use their policies when they're older, but you can be any age to qualify. But here's a good time to talk about how to qualify. Because one of the hardest parts of my job is who do you think's the most eager to talk to me and the folks that I work with? Well, and I bet you Beau could attest to this. If someone calls up and says, Beau, I want to come in today and talk to you about long-term care planning, and they sound very enthusiastic, the first thing you say is, how's your health? Because often people wait until they feel like they're going to need a policy soon, to use the policy soon to purchase it. The best thing you can do for yourself and your children and all the folks that love you is look into it while you're younger, while you're in pretty good health. And I don't mean perfect health because lots of folks get insured who have some high blood pressure as long as it's under control. Sometimes people will come up to me after a presentation and say, Oh, I'd love to get it, but I'm diabetic. Well, if your A1C level's good and your doctor says that you follow the doctor's orders, then absolutely you could probably get a good plan. But anything where you don't have things under control will be an issue. And sometimes insurability is fluid. Like, this happens a lot. Someone's about to get a knee replacement or a hip replacement, and they apply for long-term care insurance. You can't get it until you're released. You've had your surgery, it went well, you did your physical therapy, and now you're released from a doctor's care. Then maybe you have some options available to you, and they might even be some real good options. The one thing I'm going to say is when you're reaching out to the folks at RichLife to talk about long-term care planning, they'll ask you to fill out a pre-qualification form with some medical information. It doesn't mean we all know that you're going to buy a long-term care insurance policy, because they have to look at your finances to see if it makes sense for you. But what you want is them to come back with some options that you might be able to qualify for. And I say might because we don't really know what's in your medical records, but your health buys this insurance. You just can't write a check and decide to buy it. You have to be relatively healthy. And the healthier you are, the better your options, and you're kind of in the driver's seat. There are some products available where you don't have to be as healthy. Are they good for someone who can't health qualify otherwise? They're good. But if someone looked into this before they had that health change, could they have gotten something better? Yes. So stay in the driver's seat, and you want to look at this sooner rather than later. Now, let's look at long-term care protection in action. So this is a really nice piece that I think surprises a lot of people. The youngest age of a long-term care claimant that we've seen is 38 years of age. The average age is 84, and the oldest person was 103 years of age. So it really spans the gamut. The youngest person I'm aware of that I work with that needed care is actually a peer of mine's client. He was in his 40s, and he fell in the shower, one of those old-fashioned bathtubs, and he broke both of his elbows. Think about all of the things you can't do, and that takes a long time to heal from something like that. So he used his long-term care policy. So lots of different reasons why someone would use their policy. The longest claim was 20 years and 4 months. It's probably longer by now since the printing of this. 18 years, 192 months. That's a long time, right? So you never know, are you going to be the one that is lucky and dies peacefully in your sleep, needs care for 2 years or 20 years? We just don't know. We can certainly hope, right, that we'll be one of those people that has it easy. Now, this surprises a lot of people. Only about a quarter of the people using their long-term care policy are seeing the inside of a nursing home. Most people, when you say long-term care insurance, they think nursing homes. And who wants to go to a nursing home? We can't guarantee that everyone can avoid a nursing home. But when you have the infrastructure of a long-term care plan in place, it helps keep people at home. Because with the better plans out there, and these are the ones that you get, before you're about to need care, they include things like a care coordinator, a caregiving coach, a care concierge. You have this team of people. So not only do you have money to help pay for the care, but you have support. So if you want to stay at home, you're not kind of going to, remember the yellow pages? You're not going to the yellow pages or Google all by yourself trying to figure it out. You have resources that are on your side. It don't cost you anything because it's built into the plan at no additional charge. And everyone I know would prefer to stay at home. Or actually, I'm going to say back when I started in the business, everyone wanted to stay at home. But now assisted living facilities have become more and more popular. And if you or your spouse died first and you're on your own and you're needing care, a lot of people are liking the assisted living facility because there's a social component to it. You're not so isolated, and life is easier because everything's built for someone that might have mobility issues or need help. So lots of different options. Um, people are usually surprised to see that so much of this care happens at home or in an assisted living facility, it's much more pleasing to everyone, right? And pleasing to the kids too. Now, reason for initial claim, number one reason is cognitive issues by far. 55%. And it's not getting any better. When you apply for long-term care insurance, often there's a memory test as part of the application process, which is another hurdle. If you're not having any issues, it's easy to pass, but often issues kind of crop up ahead of time. And I don't mean to scare you with those memory tests because listen, sometimes mid-sentence I forget what I was about to say, or I forget where I left my car keys. The normal stuff's fine, but the earlier you do that memory test, the better. You just never know. Physical issues are also a big one. 28% of folks have physical issues like musculoskeletal or stroke or an accident or injury. Then there's heart disease and cancer. So lots of different reasons why someone would use a long-term care policy. Myth number 4. I don't need separate long-term care protection because I have health insurance. Well, we talked about this a little bit when we talked about the government program myth in the beginning. You know, sometimes they think they don't need that separate long-term care insurance, but the fact is long-term care insurance is not the same as health insurance. Your health insurance and Medicare do a pretty nice job in a lot of instances of covering the doctor visits, physical therapy, blood work, labs, tests. Well, that's not what long-term care insurance is. Long-term care is that physical hands-on care providing that you get. And the health insurance pays for the medical portion, but the long-term care is your personal physical care. Myth number 5. Long-term care protection pays for nursing home care only. Well, we talked about this already. About 80% of the care that's provided is outside of a nursing home, 75 to 80%. So that's a pretty big deal. And of course, but here I talk about how this can keep you out of a nursing home so much. But of course, if you do need to go into a nursing home, it covers nursing homes as well. It even covers the better policies, even cover things like a bed reservation benefit. I was just with someone a couple weeks ago and they said, "Oh, my mom had a plan, but every time like we'd wanted to take her to stay with us in the summer or for a couple weeks, but then we were at risk of losing her bed in the nursing home." Well, when you have a plan like this, it can pay a bed reservation benefit even when someone's not there. So they're not a prisoner of that nursing home and they can go spend time with family. So there's so many things that you don't even think about until you've lived it, right? But it doesn't pay for nursing homes only. In fact, a lot of the plans will even pay a caregiver training benefit. Let's say you want your daughter to take care of you, but she's not trained. Well, the policy can pay for that. Let's say you need respite care. You know what respite care is? It's, let's say your mom is at home receiving care and you're kind of overseeing the care, but then, so she's getting unpaid care and you want to go and have a vacation. Well, this will pay for someone to come in and help mom if she's the insured person while you're out taking the break you need. So the plans support the family. I would almost say even more than the plans support the insured. Remember that commercial, I've fallen and I can't get up. Well, what happens if that person didn't have a long-term care policy, that lady who fell with her walker tipped over? Guess what? The family would have come in the middle of the night to get her up. But what does that do? It's a tough ask, right? And then everybody feels bad that they got the kids out of bed in the middle of the night. When you have a long-term care plan, it just has all that support right there. So it does a nice job of protecting the family, and then you don't feel like a burden. Myth number 6. I can't afford long-term care insurance. This is a really important one. In fact, I showed you a plan with $173,000 that you move over. But remember, if you wanted half that insurance, you'd cut that premium in half. So these are so customizable. You'll work with the folks at RichLife, like Beau and his team, and they're going to make sure it's easily affordable. It's kind of like life insurance in that, when you buy a life insurance policy, some people buy a policy only big enough to cover their burial expenses. And then some people buy really large policies that, make their benefit, it's life changing for their beneficiaries. Long-term care is the same way. There can be a really wide range of premiums and coverage amounts, and even in the schedule of how long you pay for it. If you have an inherited IRA, there's a solution for that as well, where you can use those funds that you have to take over 10 years. So they're very flexible. And the longer you wait, the older you are, the more expensive it is. The younger you are, the better the rates are. Myth number 7. This is one of my favorites. This is the last one. We don't need long-term care protection because we have each other. And Beau, you're lucky we're doing this virtually today, because if we were together in front of everyone, I'd say, do me a favor, because I'm not at the stage yet. I'm healthy. I was raking leaves all weekend, so I can still get around, right? But if I said to Beau, who he doesn't have any issues, I'm not needing long-term care. If I said, hey, can you do me a favor? Just kind of gently fall out of your chair onto the ground and play dead horse. And let's play a game and see, without you helping me, if I can easily get you back in your chair.
That's a
Of
great
course, he
visual.
really, right? But it's so true. Think of it now. I don't know how many people are sitting next to their spouse on this call, but think about it. We love to say we'll take care of each other, but even when you don't have a health issue, it's so hard to do. When my mom got sick the second time, because the first time she got sick, she was only 70 and she was on claim using her long-term care policy for about 8 months. And then she got well. It's so interesting. I'm digressing a little bit, but what's so interesting is I was living far away. I would go for a visit, and then she went on claim. And like a month later, she sounded great and everything sounded better. And I said to my dad, oh, I guess she'll be going off claim soon. He's like, oh no, mom hasn't improved at all yet. And I said, really? That's not the feeling I'm getting when I'm talking to y'all. They sounded like themselves again. But because my mother had someone coming in helping her, it she just everything was easier and better, and she could focus on getting better. Like, my mom loved to cook and my dad loved her chicken cacciatore. So now she couldn't, she had a lot of arthritis and she had an illness that was making her extra weak. Well, now her home health aide would open all the cans and help chop up the vegetables, and my mother would kind of put it together and get back to cooking chicken cacciatore. So it's just, my dad said it really well when I interviewed him. I said, Dad, he was really resistant. He didn't want to buy a long-term care policy, and my mom made him. And he goes, I thought your mother was kind of silly when she forced me to buy this. He said, but he goes, people think that helping someone when they need long-term care is bringing them a hot cup of soup when they don't feel well. He goes, I wish it was that easy. Like, we'd be carrying my mom to the bathroom, and my dad's like 6'2", and and a strong guy, and it was so hard to help my slender mom um in the bathroom, and we were so afraid we were going to drop her and hurt her. So it's a beautiful thing to want to take care of each other, but I'd rather, my partner take care of making sure nice people are coming in to take care of me, but not doing that physical, tough work that it takes. So, Rich Life Advisors and I have helped set the record straight. And I hope that some of this was food for thought for you. And Beau, I wanted to hand it off to you to see if we have any questions or anything else I can help with.
No, again, Rochelle, thank you so much. And guys, you see why having experts that are immersed in these specific areas, niched in these specific areas, having access and having them on the team, um, the awareness of this and just what happens, what are some of the misconceptions? This has been so helpful. So if you have questions while we have Rochelle, I think we have time for a couple. If you do have questions, go ahead and put them in the questions. There should be a questions box you see on your screen. If not, we can wrap this up and I'll kind of tell you a next step. But one of the things Rochelle said, and I'm going to paraphrase because I didn't write fast enough, I was listening, but I found this to be so true over the years. And this is my paraphrase. In a way, a long-term care plan supports the family as much or more than the person needing care. Right? And it might have been Rochelle um, earlier in some of our conversations over the years that shared that with me that in a way, long-term care is um, insurance for a caregiver. And that's a whole nother conversation that we'll bring to the table about caregiving, planning, and all that. But it's real, and a lot of you have experienced that. So again, let me know if there's any questions. I don't see any yet, but as we go back to that, Rochelle, if you can go back to the last one. So as we go through the 5 critical areas we spent some time on the U and the route, the unexpected healthcare expenses. A component of that is long-term care. And where we want to be in all five of these areas is we want to say on a scale of 1 to 10, we're level 8, 9, or 10, which means we're confident and well prepared for these things. And a step I would suggest, and some of the families that are listening to this have gone through this process, some of you have not, is what I would call have the long-term care conversation. And what that means is let's talk through the ways we could address it. Um, Rochelle went through them today, but let's apply that to your specific situation, your specific finances, and then you're making a decision. And a decision could be we don't do anything. That's a decision, but at least let's have the long-term care conversation. So that's really what I would invite. I do have a question come in. That's the invite I would have to follow up on this. Reach out to us at Rich Life Advisors. You go info at Rich Life Advisors. If we want to go that next slide, have that up. And just let me know, let the team know if going through this conversation and talking through this, or if there was some specific questions that came up tonight through Rochelle's presentation. Again, the objective, I'm really big on what's the end goal, or the objective is that we can say at the end of the day, when we're checking boxes, in my role as your fiduciary advisor and kind of quarterback of this situation, can we say we're 8, 9, or 10, we feel confident, well prepared, that we had the right conversations, we're well informed, and we feel like we made a good decision. So let us know. Again, they're info at Rich Life Advisors. You can call the office and just mention long-term care conversation. We'll follow up. Rochelle, if we're having a meeting, she's always happy. If we're having the conversation, she will join us for backup support, or help run information or numbers, or give us some of the analysis. She's a very helpful resource on our team. So again, I highly encourage you. Doesn't mean that you have to do anything, that you have to do any kind of a policy, but have the conversation, because that's kind of due diligence to say, I went through the process, I went through the steps, I don't have any blind spots, and I feel like based after doing that, I made the decision. Because one other thing I want to say, I get passionate about this because sometimes we get called in after things have happened, right? And it's harder. Um, that's that's really the point is realize addressing these things that becomes very urgent after something's happened. Right. And a lot of times we'll have the families we work with come in and it becomes urgent when they've just taken care of a parent or an in-law, and they're saying, oh, wow, I saw what this was like dealing with this, sorting through this, and I don't want to do this to my kids, right? Or my family members, or whoever would be taking care of me. So I highly encourage we have the conversation. Like anything with us, there's no pressure with anything, but I want us to feel confident and well prepared. That's really my big call to action there. Now
Can
I
I
do have
just
a
piggyback on that, Beau, for
yes,
one
please,
sec?
Rochelle. I wanted to see
Okay,
your thoughts.
thank you, because you jogged my memory here, and we got one question, and I think it's a really great one relative to exactly what you're saying.
Okay.
First of all, I agree with Beau that not every person on the planet has to have a long-term care insurance policy, right? But if you decide to not do it, you still need a long-term care plan. So you still need to talk through with Beau and his team. Okay, so if we're self-funding, which asset will we liquidate first? What are our expectations of our kids? So you, even if you don't have the insurance, you need to have a plan so that you're not in the middle of crisis management. That's why it's so important to sit down to see, hey, is that self-funding plan viable? Where would the money come from? And you kind of walk through it. But I love this question that came through, because it says, if you're a married couple, do you need to qualify individually? Great question. And the answer is yes, you do. They're going to look at two folks individually. And I love this question because sometimes a married couple will apply. And let's say the husband is declined and the wife is approved. Often people's knee jerk reaction will be, well, then we both don't want it. But think of it this way. Or let's even say you're thinking like, oh, but I or my spouse might not qualify, so I'll feel too bad having a plan if they can't have a plan. Imagine if you were in your house and a big storm was coming. It's raining, it's pouring outside, and two windows are wide open. And you go to shut the first one and it's stuck and you can't close it. wouldn't you still close the other window? And so when you're a couple and you're sharing your assets, you want to protect whatever you can because it's good for each other. So even if one of you doesn't qualify, it helps the other because you're preserving those assets with that insured person so that more money is available to the person who can't get the coverage. So lots of stuff to think through, but I thought that would be food for thought, and kind of to the point of the sooner you meet with the folks and really dive into should we have a long-term care plan or should we self-fund, the better off you'll be in knowing what your options are.
And in closing, I want to say kudos for those of you for coming out, because this is how we make good decisions. We educate ourselves. We're aware of what happens, because a lot of times the bad stories you hear are people aren't aware until it happens. And then we're trying to sort through something without a plan. So I just want to reiterate one thing Rochelle said is that's part of this planning is, okay, you saw the statistics of the likelihood of this happening in a household or in a family. So, what is the plan for when and if this happens? Meaning, let's have a documented plan so we're not trying to figure that out in crisis mode or when somebody could not be in the position to make decisions, right? Let's decide them when things are good, we're healthy, and we're deciding how to take these in a way that makes sense mathematically and the way you would like to take care of them that's fits your overall plan. So again, Rochelle, any last minute thoughts? I think that's really my thing is I want everybody to have this conversation that hasn't and be able to check the box that I feel informed and I made good decisions and it's documented how we'll handle this in the likely event that we deal with it in some shape or form in the future.
That sounds great.
All right, guys. Let me know again, 770-249-7424. Just say long-term care conversation. We'll make sure the team schedules you and we can have that conversation and get really specific about your situation, right? What are the options? What are the needs in the household, or info@richlifeadvisors.com. And this is one of many, when we get to retirement, the conversations get many and a lot more complex, but this is one of many of the check boxes that we want to be able to say, yes, I'm prepared, well prepared and confident. So with that, until next time, thanks again, Rochelle, for the work you do. Thanks for the support you've given our families and our team. And given me confidence that we can help take care of our families and their assets and the people they care about the most.
My pleasure. Thank you. Thanks,
All right.
everyone.
All right. Until next time. See you, everybody. Bye bye.